You've been through multiple IPOs, and you took Springleaf public about 10 years ago, and your second IPO was Figure just last year. So if you were to reflect on the process, is there one part that actually got easier in the 10 years in between?
I actually was at a panel last week talking about the overall IPO process. And what really came to mind for me as this second time around is I know what's going to happen. So that was so much more easier because I could anticipate that the IPO day is really the day that we celebrate. Everyone's very happy. All of our stock is liquid. But then the hard work starts the next day. So I could anticipate, save my energy, get to a certain point, and then we get to work in terms of speaking with our shareholders and investors on a quarterly basis and having that longer term view of everything we say during an IPO. It's something that we have to also deliver on after the IPO. Having that look back hindsight experience was super helpful for me as part of the overall journey.
Is there a part that's gotten harder?
Yes. I have to say. So back when I was doing the IPO, we would just have the roadshow. It was just a 10-day roadshow. You would fly everywhere, meet everybody, and be at your best. These days, you have to do something called testing the waters meeting. So there's not just round one, you could have multiple rounds, like round 3 or 4. And so you're meeting investors before the IPO roadshow multiple times, telling them this is what we will deliver on. You meet them again and say, yes, we did what we said we would do. And here's where we are. And so there's multiple rounds of meetings, and being prepared for that as part of the overall journey was something that was new. And I think it's more of a newer concept. After COVID or right around COVID, people started to educate investors a lot more around who you are as a company and how you're going to make money.
I think that's been a trend from other CFOs who've gone through an IPO recently. COVID made it easier to talk about the company in the context of testing the waters or a roadshow, but it also made you always accessible to be able to do these meetings.
Because you're on Zoom. You don't have to fly around the whole world.
It's funny how you mentioned that you check in with the same investors multiple times. It sounds like you're trying to go from having dots with these investors to having lines to show them how you've progressed over time.
It keeps us on our toes. And the other thing I say about blockchain technology is because a lot of our KPIs and trends are on the blockchain, it's a constant conversation with our investors and shareholders because people will have questions. Businesses aren't linear. As you know, there's going to be ups and downs and weekends and weekdays. And so the conversations have become a lot more frequent.
Workiva wasn't around back then for SEC filing. What tech changes have there been?
It was around. It was like a brand new company when I was going through the whole public company process. And I still remember we paid $25,000 per year for Workiva. And I was asking our SEC reporting person, like, why do you want to use this? Like, you can just use Word and go through the printer. And it's so much easier. Why do you want a platform? And of course, she was right. And so we did use Workiva back then. It's become more costly, of course, because there's more offerings, but it has actually completely disintermediated the printer system, and people do everything from their offices now.
Well, historically, I heard a fun stat that IPOs would typically cost 150 grand just for the paper.
And you're killing trees all the time because you're looking at multiple rounds of documents. These are like 300-page documents, and then you have to print the whole thing.
What other tech advantages have arisen for the IPO process?
This number stat probably will give you like exactly what happened. So back when I first did my IPO, and it was a larger company, we had about 3 billion of loans on balance sheet. My team of accountants was and finance folks was 130 people. So that's what I needed to do to be able to maintain the books and records of a company, because there was no proprietary off the shelf system that really worked well, that was on the cloud and people could use it with AI intelligence on top. Today, my whole finance team is less than 35 people. And I would say the amount of money that we make, the amount of volume of loans that go through our ecosystem, it's probably like 3 or 4x, what I used to look at when I was at Springleaf. But you can see the whole scale and systems and the benefit of AI that's coming through, I'm sure not just for me, but for many other companies.
If you were to look at the timeline for an IPO, Macrina, has it gotten longer or more compressed?
I think it depends on the type of company, but I also think it really depends on the accessibility of the SEC. So, back in 21, 22, nobody could do anything because of the whole SPAC boom, if you recall. I think for 2025, I did find the SEC much easier to work with. They're much more accessible, willing to have a conversation on different types of topics because, as you know, we're a very unique company and it's not as easy to understand in one read of the S1. And so it was actually a really enjoyable process.
Stupid question. When you're going back and forth with the SEC, is it kind of like they're giving you red lines on the S1, or are they asking questions thematically about how the business makes money? What conversations occur?
Yes, they really focused on our product. So thematically, they were pointing to sections and saying, "Can you explain how democratized prime works? That's one of our products. And can you add in a picture so people can understand how this product really works?" So it was really commercially friendly for any reader to be able to pick up the document and understand what we do.
I had no idea that they went into the storytelling part of it to make it accessible about how things make money and what the product roadmap looks like. I figured it was just all about the financials and ticking and tying that.
No, we actually had very few comments on the financial statements, in fact, which is great. And we had very few comments on the legal side of the house for Specters. Was a lot of questions around how we made money and what our products do.
If you were giving advice to a CFO who's trying to IPO, let's say a window opens up, the IPO gods bless us, and they're trying to do it in short order, is there anything that you would tell them to pay very close attention to, or something that's non-negotiable, or even like, hey, this is something that I thought we had to do, but actually you can get away with saving time and not doing it?
I would say my lessons learned out of the two IPOs that I've done is really be very thoughtful around what your KPIs and key metrics that you communicate to the street and investors are going to look like, and not just be myopic about thinking about what's in front of you and who you are as a company today. I think looking at the 3 to 5 year business strategy of who you think you're going to be based on what you've laid out, are those metrics going to apply at that time? And being consistent, I think, is really important. And the other one I would say is what's so surprising is the first earnings that you do out of the gate right after the IPO, which is very close to your whole roadshow and you're speaking with the investors, you would think most companies would either like meet or slightly beat the expectations that were communicated to the analysts during the IPO process. You'd be surprised many companies don't do that. And so I asked, how are you thinking about your model? How are you communicating with your analysts? Because you actually do want to show them that you've been very thoughtful around how you built the model, how you think about the company and what the outcome is going to be on the next quarter. So I would say, please make sure you're thinking through all of that when you're speaking with investors and shareholders and analysts.
It's such sage advice to be thoughtful about the metrics long term and medium term, not just to focus on what drives the business today, because you don't want to be changing them quarter to quarter or year to year and then re-educating them because, I mean, it's all interconnected. That then informs the model that you're speaking to on what they think you're able to produce.
You're absolutely right. And I still read Springleaf. It's called One Main today, and the metrics that they talk about. And I'm proud and happy to say it's the same metrics when I was there. And I read it, I'm like, wow, it hasn't changed. This is great. I love it.
You chose some good ones then.
Thank you.
So here's a pattern I keep running into when I talk to finance leaders at fast-growing companies. You've outgrown the spreadsheets. You've probably outgrown your billing tools built in RevRec, but you're not quite at the point where you can throw a 20-person team at the problem either. That's exactly the danger zone RightRev owns. RightRev is revenue recognition done right. It handles the messy stuff like high-volume subscriptions, usage-based contracts, and mid-contract upgrades. The things that break your ERP and the billing platform bolt-ons. Here's the thing though, your sales team isn't slowing down for you. They're closing ramp deals, usage commitments, and mid-quarter upgrades. And the longer you wait to fix the engine, the further behind you fall. So stop scrambling at month end and stitching together allocations across 3, 4, 5 spreadsheets to just have the numbers ready. Well, that's it. That's the whole pitch. CFOs tell me it's like a glow up for the revenue books. That sounds like where you are right now. RightRev is worth the look. Head to rightrev.com/CJ. That's rightrev.com/CJ. Check them out.